The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. TGIF. And webinar last night I thought went pretty well. Hope you guys got something out of it. If you didn't attend, there's going to be, I'm sure, an archive on the TFNN website somewhere. You'll probably get an email about that. And as we promised last night, everybody's going to get a new version of the scanner, the one that I was actually showing Monday at the latest Tuesday, but I'm pretty sure it's going to be Monday. So look for an email to get a new download, and you'll be able to use all these features. Those are some insane cool features that we just put in. A lot of ease of use type things that are hopefully going to make your life a little bit easier when it comes to using some of our information. We're going to get right into the S&Ps here, and we've kind of been looking at this breadth situation a little bit mixed up here on the daily and the weekly, and we put in a feature that I think you guys are going to enjoy that actually incorporates pre-market activity now. So as these underlying instruments start to trade pre-market, they'll be able to populate some of the scanner breadth information a little sooner than waiting for the market to open and waiting for that e-signal daily, weekly prints to start coming out. So we found a way around that using the data feed, and hopefully that'll give a little bit more heads up on. Let me block out something really quick. Hopefully that'll get a little more information pre-market. So as we're looking at this, we're also going to be able to look at our sales pre-market and be able to see as stocks open, sales change tone. We got into as many things as we could on this scanner last night. Still weren't able to cover them all, and I think we ended up doing that webinar for an hour and 40 minutes. But for instance, on Apple, we've got these arrows now that's continuation of the trend down or up. We're actually going to get you this build on Monday, so you and hopefully have our help documents all updated with all this new information. But we'll definitely get you a version of the build itself. Okay, so focusing on the breadth here, we've talked about a little bit of a mixed bag. Breadth's not exactly coinciding with each other, but I had stated plainly yesterday that 2063 and then 2045 on the December contract were the support levels, as we look at that long-term breadth, the ability to try to step in and try to pick a battle on some of these inflection points. So as we look at this, 2045.60 was that inflection point that we talked about yesterday. If we get a weekly, and I was picking a battle around there too, as I did on 63 before when we got that 25 point rally. If the breadth on the weekly changes to negative today, and this closing bar stays below 2045, not good. Possible change in trend, even though we're still in the balanced area. Now over here, just to remind everybody, on 817 that week, as we broke below these profiles on the weekly, we had breadth change negative. Now we're just in the balanced area here, a very wide profile. We could explore a little bit more down here. Obviously, we could explore a long ways down. But with the breadth turning negative on the long term and getting below that inflection point, if that's what's going to happen, then we've got to actually look at 2045 as resistance for a while. Until some of the breadth information tells us differently. So, picking a battle at 2063, making a couple of points up into 87 that we talked about was a little bit of a resistance area for this, and then being able to fall down, go past 2063 in that hole between 2063 and 2045 with our intermediate breadth negative. What do you do now? So the what do you do now is, in my opinion, you're at 2036 right now. There's really nothing to hang on to down here. This is kind of a wait and see. For long players, you've got to get back above 2045, and a weekly close above there is going to be like almost critical. You're going to have to keep your eyes on the breadth. And for short-term guys, you're going to have some new 240 profiles appear down here to start looking at doing any nibbling. I mean, as you've seen this morning, 2045 on a 60 happened to coincide with that weekly. We did, come down here and retrace back up into it, as you can see. And this is all, shown in the scanner. I'm going to go to my future section and just, show you guys that really quick. There's the 60. There's that 2045. There's the 2045 on our weekly. And you see top there. That means it's in the vicinity, the 10% value noise factor of the height of the box. We talk about that all the time. That's why it's showing top, but it's showing a gray cell there. So this is kind of a wait and see. Not a big fan of stepping in right now, pre-market, and doing anything. If we do have some new profiles again appearing on the 240, that's going to be really cool. But right now, we've had some big moves. We could have a little bit of a snapback. Watch out for that. Some of the things going on overseas. The big thing, that I'm noticing, there's something out of China cutting in half the amount of borrowed money investors can use to buy shares. So they're kind of tightening up on the margin there. And that's going to, be a little bit of a unsettling atmosphere for adjustments. I don't know if they're going to be retroactive on that and actually cause people to sell shares that are over leveraged, or just maybe enact that on a new scale. But this is our daily on the Shanghai. We talked about this. We talked about, this particular bounce off of 33.12 and that consolidation up. We said, where's the end of this? Where do we start looking at maybe taking some profits, or the Shanghai stopping or stalling temporarily? We've got an orange bar on the Shanghai now today, new profile attempting to appear. That's our sign that the trend on that may be stalling for a little while. We've got some fundamental news that might be capping that also. Let me look at the den really quick, make sure we don't have any questions. People are talking about ribs. Let's see. Okay. All right. So as we look across the globe, we're going to look at the euro. We talked about this possibly retracing back up. Talked about a new profile happening yesterday, talking about the short trade possibly stalling for a little bit. So I want you to look at this. So we had the new profile attempt to appear. Let me just point this out to you. God, my setup this morning is a little off, so I apologize. I have some technical issues. And here we go. So there's that new profile, 107.09, 107.10 into 108.16. That's our new balanced area on the daily. We're kind of sitting smack dab in the middle of that right now. So right now, in the downtrend, we've already come off of this 108.16, 17 up top, and we're sitting in the middle of a profile. I think this is really good news for the shorts. We kind of had that little retracement. We've come into that inflection point. We're coming off of it. The range trade right now, again, 108.16, 17 for the euro down into 107.10. I think that the name of the game still here is for this one to sell resistance and sell breakouts. Not a big fan of buying any dips on this. Here's the reason why. On the weekly, the Canadian dollar trade, that's still really, really good on the north side. The U.S. dollar stalled a little bit here. We came off of that area that we talked about was going to be first resistance, 99.56. I'm still a big fan of this thing going north. The cool thing is on the dollar, we talked about this, new profile, and we talked about support at 98.44. That hit that to the tick yesterday. 98.50, let's call it. I'm sorry, it didn't to the tick. It was rounded off five pips, and now you've got an area to place stops below 98.44.45 on the U.S. dollar. And I think this time we'll probably just ramp through that 99.56 and get into 128. The DAX really, really having a hard time. And that weekly situation talked about now, resistance 108.91 on the DAX. And now you're getting some kind of breakdowns here that are possibly happening. You got to pay attention to the U.S. stock market on this one too. Getting back above 2045, but that remains to be seen. So I think the DAX is not a buy the dip right now until that happens, and then we'll figure out if it's actually a selling situation. Let's go back to our scanner really quick. Let's go into the indices. Looking at the Eurostoxx 50, not too bad. The FTSE's kind of rolled over. I'm looking at all the speed dials here. Yeah, I'm just trying to get some kind of indications more on the DAX, but I think today's close on the U.S. stock market is going to kind of tell the tale for what is going to be the tone of that for a little while. We took a look at the Hang Seng. And a big spike that had happened the other day. Take a look at this. This is something. This is had a huge move, like 2 or 3% up in one day. This is our weekly. Now we're settling back below 22.621. These kind of reversals, when we have like euphoria and huge days up, these are very damning for longs. So I think this is probably going to be a lid for a while. 22.399, coupled with 22.621, that DMZ up there, that's going to be your resistance area for a while on the Hang Seng. Let's take a look at the U.S. Treasuries, the 10-year. We're just trying to cover the usual suspects before we get into some other things today. Wow. So we talked about this possibly gravitating back up into 126.17 and using that as a inflection point to gauge whether we're going to get back into the fair auction, the balanced area, so to speak, or not. Right now, it's still a little bit of a no trade. We're going to be right back, folks. We're going to finish up with the 10-year and get into a couple other things.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. When I say I'm having technical difficulties, it's not TFNN, it's moi. So that's a function of me having some issues on my side. I got a video card yesterday before the webinar that my current video card was having problems, and I went and got one, and it actually was a bad video card that I bought from the store. And now this morning I was trying to recover from all that. And they've just made it incredibly easy to deal with stuff like that relative to the old days. So I don't know why. It's Friday the 13th. Is that what it is? Maybe that's what it is. Somebody asked me to look at, we're going to go back to the treasuries in a second and that 30-year, 10-year question. Somebody wanted to, Jim wanted me to look at EUR GBP. I always get that backwards. And I'm going to pull it up in here, EUR GBP. So here we are. There's a, and the scanners, always got the latest information. I've got a set of indicators that's kind of gauging things a certain way. On my charts, but right now, obviously, you guys can see we're below profiles in the weekly and daily. And what I'll say about this, Jim, this is my personal kind of way that I look at the markets. I put, if you watch this show enough, you'll totally be, you'll remember all these things. I say them over and over again. The weekly and the daily inflection points are something I personally really, really focus on, and the 240s kind of regulate a lot of that trend, if you will, for me. So, I don't know exactly kind of what time frame you're kind of playing around with this, but I mean, the long-term trend obviously is definitely down, and you've got some inflection points to kind of pay attention to here, and you can, really get all those visions from the scanner itself. And I'm going to pull up the charts for the visuals for everybody else. So 7186 is that big number. When we close below there, we go back and retest. Now, when I see those types of actions, and I'm fundamentally bearish on this, just like I am the EUR USD. So, again, coupled with some of the things I've been doing with the euro in general, this particular pair, I'm fundamentally still bearish on. These types of setups, when we close below, and you can see these in the scanner, and then we go back and you see that bottom, you'll see the word bottom in the scanner. You can go in here and set up your custom list. You can add literally over 3,000 instruments we've got going globally here that we update on 4 time frames. You can go in here while I'm thinking about this. I can add a list. And that doesn't mean 10 symbols only. That means 10 characters. One of our programmers put that in bad. So when I make a custom list and I come in here I can pull this up. I've added it to my list. I can put in Apple, what have you. I can save my list. I can add it to, I can go in here to Quick Nav. I can add it to, there's my tests, blah, blah, blah. Here we go, custom list. I've got some other things in there. Got some things in here that you guys aren't seeing yet, up some custom filters that we talked about last night. But I can come in here and see my test 444. I can click on it. And I can just set up my own personal monitoring system that's going to give me, as I stated before, when we had that close below and retrace, it's going to show bottom right there as it's happening. So, these are things I think are invaluable. And for my kind of own personal portfolio type situation, hopefully you won't miss a lot when it comes to these. And this is actually, in my opinion, better than having the charting, because, the charting, you can't really, identify all these things at one time. I mean, you can put 1,000 stocks in here from every different exchange on the planet. So you can come in here and go to your custom list, go to edit, and you can move the instruments around how you want to in these lists. But I can come in here and, I can add something out of Hong Kong. The Hong Kong get level, do that, and it's going to change my list, add it in here. Petrobras, whatever, globally. So let me just make sure. So that's the deal on that particular pair. On the short term, this is our 240, but again, I mean, I'm looking at resistance areas for any way possible to sell this pair based on that long-term view. Guys, we'll be right back. We'll hit the treasury scene again, talk about the 30-year a little bit, and a couple of other questions we have.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We had the PPI and the retail sales come out while we were on the break, and we're getting right into that little ripe area. 126.17.18 unfair lows. We're trading, I believe, right now real time. These are real time quotes, and these are real time derivatives in the scanner, by the way. Where are we at? High 126.17.5, which is basically 126.17.5, where the bottom of the box is. I'm looking at that right now as an inflection point to sell. All things considered, we talked about this a couple of days ago, that these act as magnets sometimes. They're very bearish when they appear above price action, these profiles like this, and these are also just sitting in the scanner here. When they come up into these types of scenarios, you're going to be able to look at that from the short side. That's going to update in just a second here. It's on a little bit of a caller check. Oh, God, we got a caller. Let me take the caller here first. Mike, are you still there? I apologize.
Hey, that's okay, John. In your program last night was very good.
Thanks. Thank you.
Hey, would you mind going over the NASDAQ 100 market breadth chart?
Breadth chart?
Yes, the NASDAQ 100.
Okay. Do you want me to pull up the chart of the NASDAQ or just talk about the breadth?
Just talk about the breadth.
Okay. Okay, great.
Okay.
Let me get that. I'm trying to
That's
find it in
fine.
the scanner. There's so many. Last night when I was doing the webinar, I thought we'd probably spend an hour and just kind of cruise through it. There's so many things in here that I wanted to talk about. We ended up going an hour and 40 minutes, so I apologize.
Well, you know what? It's complicated, and you needed all the time you took. So thank you.
Appreciate it. Okay, that's the Nikkei. Where's the NASDAQ? Let me see. Where are we at? Okay, here we go. Yeah, I mean, it's kind of a mixed bag. I'm going to pull it up and just kind of have the internals in front of us too. So we're looking at the NASDAQ 100, guys, and all the internals, and those internals allow the breadth to be calculated. So right now, I'm going to start with my 60 here, Mike. We talk about this kind of as and I'm going to take out the middle ground and just look at the crossovers. We talk about this as somewhat of a very short-term, almost day trading leverage that you have to also be aware of the long-term inflection points on the index. And those long-term inflection points on the index are also given to you as you go through the different time frames. You're able to see those really quick over here on the lower left. I don't know if you can see that. Might be a little bit of delay on what I'm doing right now relative to our talk.
Yes, I see them.
Okay, so everybody can be aware that those are the levels from those particular time frames. All right, and right now on our daily, we crossed over between the 9th and the 10th to negative breadth. Relative to what the NASDAQ was doing, obviously we're not. Sometimes we can. And I've seen this happen many times, even on the weekly. Be right at the precipice of like a long-term profile. Breadth turns negative at the same time as we're starting to cave in below that profile. Those are very, very strong signals, and sometimes we get those even in the middle of an index profile, and that means that we're looking at inflection points on the futures index itself. But right now, the daily's negative, and obviously the weekly's positive. This has obviously been, relative strength-wise, a lot stronger than the S&Ps. I'm looking at the weekly, and Mike, I'm a huge fan. I don't know what kind of time frames you're trading on, or if you're trying to manage your own portfolio and trying to figure out when to go to cash and stuff like that. Maybe you could give me a little insight on.
Well, I trade daily and I trade Nadex.
Okay.
I do the spreads, and I use NASDAQ.
Gotcha. Okay. Yeah. So, what we're considering doing is kind of getting into that Nadex, maybe having this as a product that I think it's very appropriate for people to trade Nadex. And the real appropriateness of it really is, having a biased opinion on that index, relative to the breadth and some of the profiles of the index itself. So what do I mean by that? And I think I've heard your voice before. Have you possibly talked to Daryl before? I've kind of listened to his show.
Yes.
Okay.
Yes,
okay.
Many times.
Okay, great. Because you sound familiar now. But I think this is a huge edge for somebody trading Nadex. And I've talked to Daryl about this, maybe 9 or 12 months ago. When this product wasn't exactly where it is now, and I want to revisit that with him because we've talked about, colluding on some ideas. Because he thinks these inflection points are great too. But let me go back into the future section, and let me look at the NASDAQ. Where are we at? We're going to put these in the right order at some point in our life, but. We're still real-time trading above this profile, and we're really sitting at this stage just at the bottom of our, right there's a bottom there. I don't know if you can see it. So to trade Nadex, I'm always looking, where's the edge? We're a little mixed up. The long-term is still, above profiles, even though we've kind of had our head bashed in lately with all the indices. Right. I'm looking at this still. Even though we're just kind of sitting down here at the, in the neighborhood, we talk about noise factors all the time. This is still in the noise factor. That's why it still says bottom, even though we've come slightly below this profile. Mike, I'm a huge fan of using these long-term inflection points and the bias to try to trade Nadex. And what does that mean? That means that I think that we possibly could bounce here off of this inflection point relative to all the information we just talked about.
Right.
If you go down into the shorter terms, we always talk about weekly takes precedence over daily, over 240, over 60 on down the line. And I think this is a perfect case study of that because whatever's going on in these time frames relative to the edge of the marketplace and the breadth and that daily inflection point,
right.
I'm okay with stepping in and trying to pick a battle here. And if you're talking about Nadex, maybe this is and again, I'm not suggesting or advising you to do anything, but maybe this is kind of like a daily close play,
right.
Because there's going to be some noise here.
Right.
And there's going to be some people adjusting positions this morning, and it's a Friday, and we just had some reports that kind of were Treasury positive,
Right. Mm-hmm.
which the market may like. I mean, there's a lot of things going on here, and I just see we had the 10-year come right off that inflection point.
Right.
We're just coming off of it a little bit. So,
well, John, thank you so much for that advice. That's good.
Well, please don't say the word advice. I'll get in trouble.
Well, thank you for your insight.
Thanks, Mike.
Is that better?
Yeah, that's awesome. I love the terminology.
Okay. Well, thank you so much.
Call in anytime. Love to hear. These are great
done.
questions.
Okay. Thank you, sir.
Yep.
Bye-bye.
Thanks. All right. Let me look back in the den here. Okay. Let me look at something Jim is asking. If you were to look at the profiles as if they were simple candles effectively, then when the whole profile range is higher than the previous, say on a 60-minute chart, then doesn't this show a possible bottom is in the short-term longs could be successful? Hope you understand the question. Can you call in, Jim? I mean, I'm actually a little confused there. Let me pose that as some candles. Then when the whole profile range is higher than the previous, say on a 60-minute chart, then doesn't this show a possible bottom? Yeah. Jim, the simple answer to that, I think I understand your question, is I want to see kind of sea change events on when I want to kind of gauge market turns. I can't believe, why am I doing this? If anybody's looking, please turn the other way. That means that, for instance, on the euro, let's go back to the euro because I just love this chart so much. Okay. And we're just coming off really well off of that daily unfair high. I don't know if you guys are watching this. We're just continuing to crater here. When I look at the euro, I want to really see, to have a sea change event in this particular product. I hear you, Tom. Candles are there's a lot of books written on candlestick analysis. I guess there's a lot of patterns. Some of the hosts on TFNN talk about them. I think they have decent validity. They're also using those candle patterns with some other indicators. And last night I talked about specifically, not that your broker's going to love me saying this, but slowing trading down actually has been proven to be beneficial to the trader or investor. I'm a big fan of waiting for confirmations, even if you're using candles, if that's what you've had classes on and things like that. This is number one for me, looking at our profiles and looking at different time frames and when those kind of hints of changes start to happen. But using this as another confirmation tool on top of candles may not be the worst thing in the world for you. But looking at the euro, to have a big sea change event in this particular pair, I'm going to want to see a weekly close above 113.52 now. And as you can see, these profiles, just like you're asking, in the opposite manner. Just knocked my coffee off the table. The profiles have been edging down for a long time. And Tom and I were speaking specifically last summer in July 2014, actually, a year and a half ago almost, when we broke 135.52, because that was the sea change event relative to profiles that confirmed that it was okay to be short, not okay to be long. Now, as you look at these profiles edging down in the long term, we really haven't had even a profile edge up, much less a close above those profiles. So on a long-term scene here, and again, I know this is 700 pips above to get that confirmation. That's the real kicker, right? Getting back into the fair auction means something also. As you can see, we can explore these fair auctions. But this has been one of the coolest trades. And you're talking, almost 3,000 pips that you could have played around with this thing, holding onto it, obviously, but playing around with it. This is something you could have, you could have squeezed a lot of juice out of this pip-wise, maybe 4,000 or 5,000 pips watching this show and just doing some of the simple things that we do with the profiles. Now, here's another one, right? We're continuing to edge down on the profiles, just in an opposite way. You were talking about the 60 edging up. We haven't broken stride here. Now, this is a little bit stingier situation. That's awesome because, you're not going to just give back a ton of money on the long term and still be so-called right. But we want to see closes above 108.16 to really confirm, even an intermediate change. And then you got that big mama kind of big inflection point at around 109 on that weekly that is going to trump anything we're talking about right now. That is the big, fair auction there. So, and again, you don't have to look at the charts. I'm just giving you a visual. Once you get hip to this kind of scene that I'm talking about, and I'm using the 60s terminology today, you're going to be able to come in here, look at the Forex, and get those inflection points. And you can look at your chart and see the chart action. These are, that's always welcome. But as we look at the euro, this is the level of the market, and this is where we're at. And this thing, we're doing so many calculations. We refresh this. We try to get everything incorporated in 60 seconds. Sometimes in a fast market, it's a little bit later than that. But there's that 109, 108.99 I'm speaking about. That's the big mama number that we've been talking about. Here's the inflection points that we came off of today already, 108.16 to the tick, 108.17. Here's that treasury. Let me go back into here. There's the 10-year number. There's, sitting right at the bottom or in that vicinity, coming off of there. There it is. These are in decimals. I'm sorry, I'm gonna have to change that to fractions, but that's kind of a weird thing to do in a database, is to convert some to fractions and some to decimals. So, in 30 seconds, that's the 126.17 and a half. And by the way, I'm going to explain a little bit about these arrows a little bit deeper when we come back on the gray cells. Those are great heads up to what's going on in the past, and we'll talk about that a little bit.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome to the show. The question. I had a question about these arrows on the gray cells. What we're doing with this too before we release this to you guys on, with all these cool things, uptrend reversals, a lot of canned. If you guys are joining us late, a lot of canned custom filters that actually you can't put together yourselves on the regular dashboard by going up here and just kind of creating your own filter. If I go here and 4 hour or 1 hour, week above and 4 hour below, and maybe daily above, it's going to create a situation where we've got ultra strong stocks in this case, and then they're starting to show some hints on the 240 only. So that's what I created there. There's some things on the custom filter section that actually look back in history, and I'm getting to the error question in a second because it pertains to what I'm going to say. So we kind of look at uptrend situations, downtrend. How do you define those? It's hard to define those in those filters up top. So we've created what we thought were, the usual suspects, if you will, of the custom sort field. So what I want to say is some of the things that we use in here, and I'm going to go back to my dashboard, and we're going to look at Abbott Laboratories. All right. So what we're doing is we're looking at ABT, and by the way, these are updating pre-market here now, which is ultra cool. ABT, let's just go into here. And obviously you saw the color change situation there. Let's see here. Okay, so we're one. That's a first bar of a breakdown that started happening yesterday. And what we did on the breakdowns and breakups, the breakdowns and the breakouts, I'm sorry, is we wanted those concepts to get through the noise. So we kind of omitted tops and bottoms on that filter. So we want to see a valid push through the noise area. So when you see a 1, and you'll see it on those filters, we're kind of taking out of play the top and the bottom situation on the breakouts and the breakdowns. Just want to state that. So that's saying right there that 6 and an arrow down. So let's go to Abbott Laboratories. So what we're saying here is we're 6. We're going to actually increase this to the breakdown point. But what we're saying is we have 6 gray bars in the fair auction, and we're in a defined downtrend in this. And obviously, now in the fair auction on the weekly. So that arrow is basically saying we're in a downtrend on the long term, and we're looking at the 1 on the red cell by saying, we got through the noise level. We're breaking down the daily right now. And long-term trend is down, even though we've had a little bit of an intermediate rally here, which is, something to definitely trade off of. We're in a defined profile edge down gem downtrend. All right. So because the last time we broke down, we broke down below a profile and we still haven't edged back up above the current profile. So this is kind of what we call, sea change event in Abbott Laboratories. And then we're coming up into resistance. I mean, if you guys can see this, it's just so cool how this works. When you have a former inflection point also lining up with the current one, those are like ultra awesome. Don't know if I answered the question well enough. We're going to be back again Monday, guys, and I'm going to work really hard over the weekend to get this scanner out to you on Monday, the newest version. Thanks, guys. Stay tuned. All the hosts on TFNN will take you through the market all day long, get you through the minefield. Have a good day and have a good weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.